I want to pivot and talk a little bit more about Asia, China in particular. I mean, we can't seem to, they're starting to see signs of conditions that maybe we could be seeing a rebound in this market, right? They're laying out stimulus in some way and what form that could take. Banks are cutting deposit rates in some ways as well. Are we bound to see, or are we preparing now for a rebound there in that market? What are you seeing in terms of flows there?
I think some investors are. If you look at May, the flows were pretty poor. Outflows, as you can imagine, is a very rough month for Chinese equities in May. We're looking into the second half of the year, and investors are basically wondering whether this decoupling between U.S. and China, not just on the tech front, but also in terms of asset allocation.
Yeah.
You need to see a much higher growth rate in China versus the U.S. in order to justify moving back into China, given the geopolitical risks and the lack of policy stimulus that we've been seeing. We actually think you will get that, but investors are not going to chase China investments at the moment until we start to see those growth differentials. So it might be a little bit longer to wait.
Yeah, and the geopolitical sort of component to that doesn't look like it's going to go away anytime soon, or that premium. Meanwhile, though, you have India that's doing well. Japan's been doing well. I'm sure you're getting a lot of questions on markets like that. So,
yeah.
so what's the advice?
I think those two markets are very different. Right. I think investors are positioning in India for longer term asset allocation. That will be, generally be the growth driver of Asia in the next decade or so, as it kind of shifts away from China, given the demographic issues there. So I think that's a little bit different. The Japan trade is a little bit more tactical in nature. It does make a lot of sense if you look at interest rate differentials. Japan is really the only broad economy or central bank that's still easing. So it makes a lot of sense, but we've seen a pretty significant rally. So whether now is the time to chase, I'm not so sure. But certainly, whilst the BOJ are still easing, it is a pretty obvious trade.
How are you looking at this whole AI story? Obviously we've seen that go into North Asia quite a bit. And even when it comes to, are there implications on the macro economy as well? I'm just wondering, does it push back all these kind of recession concerns, credit crunch and the like here? It seems like right now there's so much focus on this space.
Yeah, it's obviously very difficult to quantify what the impact is going to be on broader economies and even single stocks, right? But, if you look at, again, where the allocations have been going, South Korea, Taiwan, which are really the semiconductors, tech type companies, those are the markets that have been performing very, very well on the back of this on the back of this story. So that's kind of the flavor of the quarter, I would say. But in terms of actually assessing what the impact's going to be on broader economies, it's still way too early, I think.
Is there an ETF for that? I'm curious.
Well, we look at mostly the semiconductor
okay,
ETF.
So that's the proxy for that.
Yeah. There are obviously thematics as well, robotics, these kind of things where investors have been playing at the margins, but it's not a core asset allocation yet.